VAT law applies, even then there is no tax because it's an agreement signed outside the country. Or it may be import if I apply the circulars given by the Maharashtra government.
So, in both cases, in your case, service tax applicable, VAT is not applicable. And you have got two arguments, one outside India and the fact that it is not exclusive. These are the two arguments. Yeah. Now, before I go to the rejoinder to cut short so that it can be merged, any questions? Sir, while the rejoinder has been considered, the questions also can be taken cognizance of. Yeah.
The only part one we have to see is the right to use is transferred by of an agreement, and registration thereof is a post-transfer what we call procedure. Now, if you were to see the before the demat area of shares being introduced, equity shares transfer, etc., we used to have a transfer deed being handed over to the buyer and buyer then sending it to the registrar for transfer. Those times the capital gains, etc., was accrued on the day when the transaction was entered into and not on the date of registration of such transfer. So same thing can be attributed here, saying that the agreement is the transfer. Now, if agreement is entered outside India, whether the location of the registry is in Maharashtra or say New Bombay or say New Delhi, etc., is not relevant.
No, I think both the speakers have said that. No? According to their view.
What I am trying to say, before this aspect is missed out.
No, but that what I am saying, both the speakers, one thing they are very clear, whether registration, whether it's not so crucial to your decision.
Fine,
thanks. Andy, yeah, you had something. Anything else?
No, that's fine. Thanks.
Sir, just want to extend what Mr. said, that brand is omnipresent, available across the globe. In case two international giants entered into such transaction in say the Netherlands, which is tax haven for their IP additions, and that brand, say Coca-Cola transfers it to Pepsi, the entire brand, or something like that, and it's applicable across India. And by that agreement, even Indian subsidiary is entitled to exploit the brand. Whether transfer pricing or something, such attribution or something like that will be applicable in this case.
We have to restrict ourselves to this case study. Otherwise, we would be entering into
I was just talking about merger scenario when it happens.
I agree. We will take another seminar on that. So we have one more case study, and we should restrict it to the syllabus of today. So, you have anything on this issues which the speakers have dealt with? Then we say anything on that.
So in case of merger, whether there will be a transfer pricing exposure or not, that one will understand.
I think Vishal, you dealt with that, no?
No, I think he referred to 92B2 in the context of the EPC contracts. So for an overseas merger, I think now 92B, the transfer pricing provisions, I'm not a specialist, but they have been amended to take care of business restructuring also, and if there is a merger outside which has Indian tax implications, then the transfer pricing authorities are entitled to look into what it is. There is an argument whether the section really applies or not, but you can be sure that the transfer pricing authority, if they believe that as a result of a global transaction, if more than what which is relating to India is also passed there, Indian taxing authorities will try to attribute some portion to the Indian limbs of the two subsidiaries if there is any.
Vishal, you want to add something? Bharat? Yes. Yeah, to that.
What is the mention about the Maharashtra VAT circular? Keeping aside that VAT circular, if intangible goods are there, how it can be sold interstate? Can you visualize?
No, to my mind, intangibles cannot be sold interstate. Because if I have to sell a brand or IP or copyright, I just need to sign an agreement. The minute the agreement is signed, it's yours.
It is a local.
So it's always a local transaction. That's what I said. However, the circular is beneficial to you if you want to use it.
I'm sorry, Parin, I differ here in the sense that when you have certain obligations under those agreements, like if I'm transferring, say, copyrights in respect of a film, for which I require to make a DTH cassette, and this needs to be transferred to Doordarshan Delhi for broadcasting in India. That obligation of interstate movement of that physical cassette would mean that this is a completion of my agreement only when I complete my obligation of dispatch of it. In that case, it can be interstate.
Then your agreement will have to be for the cassette, which should be the subject matter of the transaction and not copyrights.
An obligation which is very purpose of this agreement.
So if I say I'm giving you the copyright for a film, and as a consequence of giving the copyright of the film, I will give you 20 copies at this location. To my mind, still my first transaction is giving you the copyright, and the handing over of the master prints is only a subsequent transaction, may not impact. But then you have to merge the copyright with the master prints in such a way that the subject matter of my transaction becomes the master print itself. In which case, then you can say applying. I'm sorry, I'm forgetting. ACC. Applying ACC's decision. The minute any intangible is put on media, it becomes goods. Then you can say that that will be a transaction of tangible goods, and there can be an interstate transaction. Same in the case of a copyright in this example, where you are transferring the product manuals or the research material. If these are hard copies, then you can say the subject matter of my transaction is sale of this manuals. In which case it will be actually a sale of tangibles and not intangibles.
Yeah, Deepak, quick.
Based on exclusivity and non-exclusivity, about whether a transaction is a permission or a lease right to use. Now matter is before Bombay Court in smoking those pizzas.
We'll go to the next one, unless you have any of the nothing. So I think next one, I think, who starts? First you start, the software, expound the facts, issues, and your answer.
So here is a case where Software International, who is registered and based in Maharashtra, provides software solutions. Please mark a few aspects of this particular case study. It provides software solutions. Now, while providing the software solution, it involves various things to be done. One, purchase and sale of hardware, which is computers and servers. Second, providing customized software development services, which is developing the software according to the customer's requirements. Third, sale and purchase of standardized software products from third parties, which is Oracle and Microsoft. So this entity, which is, sorry, I keep on forgetting the name, Software International, will purchase the software, standardized software from Oracle or Microsoft and sell it to the clients. Fourth, developing in-house standardized software and selling this standardized software to the customers. So there are 4 different kinds of activities which take place. Now, to the extent of the third element, which is buying and selling standardized software of third parties, the case study says that this software, which is a third-party software, in this example, has been developed by an entity called Soft International Limited, which is a US-based entity. Soft International has entered into an agreement with Software International to allow them to be the exclusive distributors under a distributor agreement. Under the distributor agreement, they are allowed to buy the software from this US entity and then go and hunt for customers. However, as and when the customers are found, there is an end user license agreement, which is entered into by the end customers directly with the Soft International USA, which is the US entity. And this term of the license, which is granted to the end user, is a perpetual license. It goes further to say that while providing the end-to-end software solutions, the solutions which are given by Software International, the Indian entity, may have various components. It may include hardware, customized software, third-party software, and own standardized software. Or it may have 3 elements excluding hardware, which is the third-party software, customized software, and its own standardized software. We have to discuss the direct and indirect tax implications and any structuring opportunities over here. Now this is a little rather quite tricky, because I found this to be the toughest question amongst all. So far as I'm going to look at this para, which is the end user license, which is 3.2 a little later. Let's first look at the subsequent transaction, which is more critical. So far as this 3.3 is concerned, which is talking about the end-to-end software solution, the whole implication will really depend on how many transactions are there. Again, similar to the first example which we discussed, when there is hardware, there is customized software, when there is third-party standardized software and own standardized software, are these 4 transactions or are these 1 transaction? The example starts by saying that Software International, the Indian entity, is required to give end-to-end total software solution. Now, when you are saying it's an end-to-end total software solution, I am interpreting this to mean that there is one deliverable, there is a single transaction, and the final solution is required to be handed over to the customers. Now, in the event there is a single deliverable or a single solution which is required to be given, all the four different activities, which is hardware, customized software, standard software from third party, and core standard software, are four different elements of a single transaction of sale. And when these are four different elements of single transaction of sale, I would treat the whole transaction as a transaction of sale on which there is a liability for payment of VAT or CST, as the case may be. An argument can be made to say that while you may agree to say that hardware is a sale, software is a sale, standard software is a sale, but what about customized software? Now, in customized software, we always have this debate on whether customized software will be a transaction of service or a sale. And here, my interpretation is that in the case where you have an agreement to develop a software for somebody else, where you are actually commissioned to undertake the development, and where the IPR directly rests with the customer, then it is a transaction of service where it's a customized development. But where you are required to develop a software and hand over a developed software to a customer, it becomes a transaction of sale, maybe a customized software. In fact, if you look at that decision of the Bangalore, Karnataka High Court in the case of Sasken Communication Technologies, that's precisely the proposition which they have laid down, to say that even for customized software, it can be a service or a sale depending on the nature of this transaction. Now, to my mind, since it's an end-to-end solution which is required to be provided, this will be, even in the respect of the customized software, the customized software, after having been developed, after having been integrated in the final solution, is then given to the customer, and therefore that should be a transaction of sale and not a transaction of service. So this is the first interpretation which I shall put forth. The second element is going to para 3.2, which is in respect of the imported standardized software, and where the end user license agreement is entered into directly by the US entity with the end customer. And what should be the nature of this transaction? Now, I believe this particular issue is really emanating from that Madras High Court's decision in the case of Infotech Software Dealers Association, where the Madras High Court has gone to the extent of saying that although software is goods, but since the end user license is directly entered into with the end user, this becomes a transaction of service. And I feel that the observation which is given are not really appropriate, and they have not really interpreted it correctly. And let me give you a couple of thoughts on this. I am this Software International India is a dealer in software. It buys 10 copies of the software which is coming on a CD or in the form of a key, which is buying and it's coming to itself. And thereafter, it is required to sell the software to the end customer. And when the end customer wants to use it, he will get the key, or he will enter into an end user license agreement with the US entity. Now, just because you have to enter into a end user license agreement with the US entity, doesn't mean that whatever has been acquired, say 10 copies have been acquired by the Indian entity, he is not the owner of those 10 copies. What stops the Indian entity from opening those 10 boxes, intimating to his US entity and saying, I am going to use it myself without any additional payment? Therefore, to the extent of the 10 copies which he is required, he is completely entitled to use it, subject to, of course, certain things required to be done by whoever is using it. It may be himself, it may be a person to whom he sells, but that really does not matter. If he keeps those 10 boxes and those 10 copies with himself perpetually and never sells it, never uses it, never opens the box, to that extent of the 10, he is still the owner of those 10 boxes. He is not required or accountable to his principal what he did of those 10 boxes. He has already paid the price for it. And therefore, to my mind, still in the case of a standardized software, notwithstanding an end user license, notwithstanding the requirement to intimate the actual developer of the software and get the access key from him, the person who's acquired that right, the CD or that right to acquire the access key without any additional payment, will be deemed to be the owner of that software to the extent of the licensed copy is concerned. Now, let's not confuse this with the copyright. Copyright still remains with the owner. the minute the software is replicated and put on another CD or on a media, that becomes an extra copy, which is a copyrighted product. And to that extent, you can say that the Indian entity is certainly buying those copies, the 10 copies, the 12 copies, or the 50 copies, which it is stocking and it is retaining within itself for further trading or further sale. And to my mind, this transaction can be nothing but a transaction of sale, on which the Indian entity will, of course, being an import, not liable to pay tax. As and when it sells the products further, again they should be only levying VAT, they should not be levying service tax. The end user, the purchaser, may then contact the developer of the software and get his key in order to access and activate the software. But that is a subsequent event only in order to activate the use of the software. If you look at the education guide, which has been given after the 2012 amendments came under the service tax law, they have also accepted this proposition. In fact, the education guide clearly and every way simply follows Tata Consultancy Services, the TCS decision of the Supreme Court, where they have said that standardized software are goods, and to that extent, in the case of sale of a standardized software, there shall not be any levy of service tax. And applying this analogy to my mind, in this case of the agreement with Soft International USA, these should be only transaction of sale and purchase of standardized goods or goods covered under the VAT law and not under the service tax law.
Before, just 1 second, would your answers change if the single contract, like the first one, separate consideration are there for hardware, for computer software? Would your answer change?
I'm coming to that. That's what you are saying by a structuring option. So I think I'll just add to what Parim said. There are 4 or 5 points. The first part is we are talking about, are there any structuring options available? Yes, I think this question is a mixture of the first case study and second case study. Because in first case study we have different contracts. Here we can have different contracts, one for hardware, one for software, etc. depending upon the tax planning which is possible. Rather than treating everything as goods, we can try to treat something as an import and therefore do not pay tax, etc. So that structuring is definitely possible, because if you combine everything into one and try to project that as a sale of hardware coupled with a software, whether it is a standardized software or a customized software, it becomes goods liable to VAT and liable to, possibly could be liable to customs duties also. But if you can structure it separately and treat software as intangibles, where the license key comes electronically from the foreign party, then it is possible to save customs duties to the extent which is coming from the foreign party. This is one structuring which is possible. The other point which I would like to add is that to my mind software is also an intangible. So here if we try to say that and here also, as far as that licensed software is concerned, which is being purchased from Oracle or Microsoft, wherever, that license again is given to that particular individual. That's how the business practice is. He cannot sell that, he cannot copy it, he cannot do anything to that. So if I compare that with the brand, which we discussed in our previous case, that even in case of a brand, that entity can just use it, he cannot do anything else to it. He cannot sell it to somebody else. So to that extent, we will have to, according to my view, we will have to take a consistent view in case we are splitting this contract, to say that either it is a sale of goods and therefore liable to VAT, or if it is a licensing arrangement, pure licensing arrangement, then it is possibly a transfer of right to use, which I think Deepak Bhai raised that point at the last, that if it is a transfer of right to use, then it always, then whether it is a perpetual transfer of right to use and therefore it is permanent and not taxable, or is it a temporary right to use? Because if I have that right is with me, then I can always withdraw that right. And if I have a position to withdraw that right, it becomes temporary and then it becomes liable to service tax. To my mind, this is a point of controversy which needs to get settled somewhere and the courts will settle it. But it is quite open to an interpretation to say whether VAT and service tax both will be applicable or only one will be applicable. And yes, again coming back to your question, I think it requires a structuring of this type of contract. I don't think you should put this everything into one basket and just try to do that, because then otherwise all the taxes, possibly both VAT and service tax, could be applicable. But if you structure it properly, then at least one tax you can avoid. This is my answer, if I have answered that question.
So I think the conclusion is coming out that as regards end user license, you say it is a product, you say it's a service because of license to use, unless it's a perpetual use. Even if perpetual use, you still say there is right to use.
I would say if it's a perpetual use is a sale.
Yes.
My point was not that. My
Yes.
point was that we have to treat all intangibles
Yes, yes.
alike.
Yes.
So either they are sale or service,
It is there's only one thing. This tax implication both on the cost and the revenue.
right?
One is the cost is what I have to pay the end user license to my foreign person.
Right.
So that component, it appears you are saying sale of product not liable. You are saying electronic downloads no custom duty, but issue of service tax may come.
Issue of service tax may come.
Now, as regards the income part, you are saying that if it is one single transaction, is a sale.
Sale.
And if it is hardware or not, depends. If it is hardware, it is sale. If it is standardized software, it is sale. And if it is customized, it is service. Correct?
Sale.
Yes. Customized service, if you break the transaction. If it is
As
one single transaction, it is sale. But I agree. But if you, in your view, there was a separate, like the first one, then you would say hardware is sale, standardized software is sale, my own standard product is sale, customized will be commission job. In your case, sir, hardware is sale, customized service, but the standardized also you would say the license to use would be a service.
slightly different. My point is standardized is also a sale. That's my view.
Yeah.
What I'm trying to say is that I'm just referring it back to the previous case study,
Yes.
where if in case of intangibles and
Yes.
software is also intangible.
Yes.
If we are saying that is a service or that is not a sale,
Yes.
then this will also not be a sale. So they have to be treated at
Yes.
par is what I am saying. Otherwise I agree it's a sale. My view is that
It's a sale.
perpetual transfer is a sale.
Yeah. Notwithstanding ISOTA.
Yeah.
So under
What I
the,
can see is one of the major things you have is end user license. From your perspective.
so yes, I think under the Income Tax Act, I think both Vishal and I were deliberating, and I think the matter is reasonably simpler because as we discussed earlier, when if it is a sale of goods and completed outside India, not taxable, so hardware not taxable, and there is some scope to argue that if the software is system software which is used for the operating the equipment, then one can argue that that goods, if that's for that software is not taxable. Otherwise, the way the act has been amended over a period of time, any payment for software, whether you get a right to duplicate that software itself or you make a payment for a copyrighted product, the point that Parin made, both will be considered as royalty under the Income Tax Act, which will require a withholding. And what the various courts have said, and there is a decision every second day on income tax when it comes to payment for software. And what courts have said that under the Income Tax Act, Section 916 is very wide, royalty has different clauses and limbs. So there is also, what is the definition there is very wide, transfer of all or any rights in respect of various things. And as Hitesh mentioned, the case laws have dissected what is the payment for software. So is software a literary or an artistic work, or is it a process? And they have said it could be either one, to their due to divergence of use. But broadly, all of them have said that it will fit into one of those clauses, and as a result of which it will be considered as payment for royalty, and therefore it will be considered as a taxable transaction. Further, there has been a explanation which was added with retrospective effect, which said that it has been clarified that transfer of rights means including the right to use. If there is a right to use the property, also then or the software, it will be considered as royalty. Right? Now but the matter is not, you always have, as he said, डूबने वाले को 3 इंच की सहारा जरूरत होती है. So in the context of a treaty, this may be a little different, because in the context of a treaty, in the OECD commentary, and there was a separate body which was examining this entire for the TAG group. They said that they made a difference between a sale of a copyright and a sale of a copyrighted product, and they compared it with a book. When you say that when you sell a book, are you selling a copyright or are you selling a copyrighted product? They said no, it is a sale of a copyrighted product, and therefore the OECD commentary makes a distinction, And therefore, under the treaty, it is possible to argue that when you are making a payment for a shrink-wrapped software, off-the-shelf software, then it is not royalty, but it is business income in the hands of the seller. Now, even there is a twist. That there have been some rulings which have come in recently, which said that when the domestic law has been amended and the explanation in the domestic law has widened the definition of royalty, should this be applied in the context of a treaty where that term has not been widened or defined separately? The Madras High Court, though not in the context of a royalty, but in a context of a payment for broadband services or something in the case of Verizon, seemed to suggest that that should also be read into the treaty interpretation as such. And therefore, the argument that under the treaty it is not taxable is becoming a little difficult, but there is still a decision of the Delhi High Court in the case of Infrasoft, which has made this distinction between a payment for a copyrighted product and a payment for a copyright, and they have held that under the treaty, if the language is different from the domestic law, it will not be taxable as well. So under the domestic law, and because as you said, this is largely a body of maybe, the simple thing is in most cases taxable as royalty, but where you have a treaty which is slightly differently worded and little narrowly worded compared to the domestic law, possible to argue that it is sale of a copyrighted product and therefore not taxable.
I think the only interesting issue arises in this is what happens when you don't have possession over a software. So for instance, let's say I am purchasing a Microsoft Office, I get a CD box. But let's say I don't have possession over that software, I am actually going on the net and let's say Office 365. I think this is really the challenge going to come, because today when I download an app, effectively it's a software. So is it that I'm actually paying royalty? And my personal view is that even to apply that explanation, I should have a tangible possession over the software. So if I'm going over a net and doing something, then it's a facility being given, and therefore that expression should not trigger, just to cut short that. So that's, I would like to believe, will be an emerging issue.
But I think in a couple of tribunal rulings, in fact, they have made this observation. Then can you say that, in the context of a book and things, and I think the Reliance Infocom ruling, but they have said you can order all these online and you won't have the possession. So it doesn't make it any less of it a royalty. So they say that even as long as you have the right to use that copyright, whether you have the physical possession or not, yeah, and a very important observation is made that what is this the right to use and the use of a copyright. And they have said that it could be the distinction could be between an observation, an analogy has been made to a tenant and to a subtenant. And if they say the subtenant actually uses the property and the tenant actually makes payment for the right to use the property, and they say both these rights under the Income Tax Act are taxable. So even the right to use also is taxable. So in the case of an online, in their view, even that is taxable. I'm advancing the department's contention.
So I think that was the first point, and I think the second point, the last point I wanted to make was more on the distribution right. So very interestingly, when you look at section 14 of the Copyright Act, vis-a-vis all other artistic and other products, it says the right to copy, etc. For software, there is an additional clause which says the right to sell. Now this is very interesting, because if let's say a foreign software manufacturer like a Microsoft, it appoints somebody as a distributor, the agreement says I'm giving you the right to distribute my products, then does that right provided to a distributor becomes a copyright under the Indian Copyright Act? So that's the first question. If you take a literal reading of that clause, it seems to suggest yes, it is covered. I believe there is one tribunal decision of some South India, I was trying to find out, I could not lay my hands, which actually says no, only if the distributor has been given a right to appoint sub-distributors. To transfer that distribution right to the next level, would this clause be applied? I was not very sure whether that is the case. In any case, the argument would be that if I have not paid a specific consideration for this distribution right, for being appointed as a distributor, then there is a controversy. Because whatever payment I make it really for product, etc. So these were the only 2 points I thought in addition to what we.
Sorry, I also wanted to make another point. I think the board also issued a circular in the context of a distributor saying that once